Welcome to today's episode of the Deep Dive Credit Podcast, presented by Elite Credit Solutions. We are your trusted partner in affordable credit repair, proudly based in Tampa, Florida, and dedicated to serving clients across the entire United States. Join us as we explore the intricacies of credit management, share expert insights, and empower you with the knowledge you need to achieve your financial goals. Get ready for an enlightening journey into the world of credit. Let's dive in.
Everyone to the deep dive. For this deep dive, you guys have sent us like a really thorough set of materials.
Yeah.
All about the ins and outs of wage and benefit garnishment. So we've got a bunch of perspectives. We've got the Consumer Financial Protection Bureau. We have some practical advice from NerdWallet. We have, the perspective of an employer from Paychecks, and then even a look at how all of this can affect your credit from Equifax. So quite a range of viewpoints to approach this important topic.
Yeah. I think the variety is really key here because we'll be able to kind of piece together not just like the hard and fast rules, but also what it means for both employees, and employers alike, too.
Right. Yeah. So that's kind of the goal here with all these different resources, to see how all the pieces kind of fit together. And our mission for this deep dive is to really try and pull out the most important information for you. So we want to come away with a clear picture of who can actually legally take your wages and benefits, what protections exist, because I know there are some protections, and then most importantly, like, what are the steps that you can take if you find yourself in this situation. So I guess to start, the very beginning here, what is wage garnishment? Like how would you explain that?
Yeah. So, at its most basic level, wage garnishment is really just a legal mechanism to recover a debt. And as, all of our sources here mention, NerdWallet, Equifax, Paychecks, they all kind of point out that it's basically a process where a portion of your earnings is withheld to pay a debt. And one thing that I think NerdWallet points out that's interesting is that it's not just your wages that we think about traditionally coming from a paycheck, but it can also be, funds that are in your bank account.
Right. So it can be any kind of income. It could be like, dividends, or it could be even money that's just sitting in your account too.
Right. Exactly.
So I guess, like, what's the typical starting point for this process? Like, how does this typically get underway?
Yeah. So, the typical, starting point is, some kind of legal action. So the CFPB, NerdWallet, Paychecks, and Equifax, they all really highlight this point that if it's a private creditor, like say a credit card company, or if it's a debt collector, typically what happens is that they sue you in court. They get a judgment confirming that debt, and then they get a court order that actually allows them to garnish those wages.
Right. So it's not like they can just, without any process, just go to your employer and be like, hey, we need this money. There's a legal process in place.
Exactly right. And Paychecks specifically mentions that the way that it often works is that the employer receives what's called a writ of garnishment.
Okay.
So an actual legal document that outlines all of this.
Gotcha. So there's paperwork involved.
Exactly.
Now, I know I saw in some of the materials that there are certain situations where maybe a court order isn't actually required.
Right, and that's a really important distinction. So in certain cases, especially when it's a debt to a government agency like the IRS, the federal government, they don't actually necessarily need to get a court order to start garnishing wages. And, all of our sources kind of cite this point, the CFPB, NerdWallet, Paychecks, and Equifax, they all mention this, that things like, unpaid taxes, federal student loans, child support, those are common debts where this administrative garnishment can happen, where they can basically go directly to, start garnishing wages.
Right. So the government has a little more power than a private creditor would in certain cases.
Exactly. They have that power to kind of go directly to get that money.
Gotcha. And NerdWallet specifically made this distinction between wage garnishment and what they call non-wage garnishment. Can you talk about that distinction?
Mm-hmm. Yeah, definitely. So I mean, wage garnishment is really the process of taking that money from your paycheck, like directly from your employer, from each paycheck. Whereas non-wage garnishment is, sometimes also called a bank levy. And that's basically where the creditor goes to your bank account to get the funds.
Exactly.
And the reason why it's important to kind of distinguish between the two is because the laws around them, the legal protections around them can be slightly different depending on where that money is coming from.
Right.
And Paychex also mentions that there are certain things that aren't considered garnishment, like if you have something that you've voluntarily, said, hey, deduct this from my paycheck, like if it's for your health insurance premiums or something like that, that's not really considered the same thing.
Right. Yeah.
It's not considered a garnishment under the law.
Right. Yeah, that makes sense. Okay, so we have a pretty good sense now of what this process is. Who can actually garnish these wages and benefits? Like what types of people or entities can do this?
Yeah, so I think all of our sources paint a pretty consistent picture here. So we've got private creditors. So think of credit card companies, banks. If you have a mortgage and you fall behind, debt collectors, those kinds of companies, they can garnish your wages. And, as we talked about earlier, they typically need that court order to do so. And Equifax highlights that pretty clearly. Then, of course, we have government agencies at all levels, really, federal, state, local. And, the CFPB, NerdWallet, Equifax, and Paychex, they all kind of point to the same examples, like back taxes, unpaid student loans. Those are common reasons why a government agency might garnish your wages. And then, of course, we also have, things like alimony and child support. Typically those are enforced through court orders. And, all four of our sources kind of agree on that point.
Okay, so it's kind of a spectrum there of people who can do this depending on the nature of the debt, I guess.
Exactly right. It really depends on who you owe that money to, whether it's a company or whether it's the government, and then what the debt is actually for.
Okay. So so this is probably the question that a lot of people are wondering. If someone is garnishing your wages, like, are there limits on how much they can actually take? Like, is there a point at which they have to stop?
Yeah, absolutely. There are definitely federal limits on how much can be garnished, and NerdWallet, Paychex, and Equifax, they all point to this. And these limits are really based on what's called your disposable income. So basically, it's not your total income; it's your income after certain legally required deductions are taken out. So, things like taxes, Social Security, those kinds of things.
Right.
So it's really based on what you have left after those essential things are taken out.
Right. Okay. So it's not your gross income.
Exactly.
It's your net income or something like that.
Yeah, something like that.
So, so for the most common, like, consumer debts, like credit card bills or medical bills or things like that, what are the federal limits there?
Yeah, so for those types of debts, NerdWallet explains that the most that can be garnished is the lesser of two things. So either 25% of your disposable income,
Okay.
or the amount that your weekly disposable income exceeds 30 times the federal minimum wage. So right now, the federal minimum wage is $7.25 an hour. So 30 times that is $217.50 per week.
Gotcha. Okay.
So it's a little bit complicated, but basically there are those two calculations.
Okay, so to break it down, like, really simply, if your weekly disposable income is $217.50 or less, then no garnishment at all is allowed for that kind of debt.
That's exactly right. So if you're making that amount or less, they can't garnish your wages for those kinds of debts.
Gotcha. And then, like, if your income is like $290 a week or more, then it's capped at 25%.
Right. So if it's between $217.50 and $290, then they can only take the amount that exceeds that $217.50.
Right.
But if it's $290 or more, then it's capped at 25%.
Gotcha. Okay, so that makes sense, and that's pretty good because that ensures at least some level of income.
Yeah.
For your basic living expenses.
Exactly.
Now, what about things like child support and alimony? Like, are those limits different?
They are different.
Uh,
And it kind of makes sense because, the law recognizes that those are important obligations. So NerdWallet, Paychex, and Equifax, they all say that for child support and alimony, up to 50% of your disposable earnings can be garnished if you're supporting another spouse or child.
Okay.
If you're not, then it goes up to 60%.
Wow.
And then on top of that, if you're more than 12 weeks behind on your payments, then an additional 5% can be garnished.
Oh, wow. Okay, so that's a huge chunk.
Yeah, it can be a significant portion of your income.
Right, right. So, yeah, I mean, I guess it does really underscore the importance of making sure that you make those support payments.
Right.
Okay, so what about debts that are owed to the U.S. government, like federal student loans or other non-tax debts? Are there specific limits for those?
Yeah, so for those types of debts, NerdWallet, Paychex, and Equifax, they all agree that it's limited to 15% of your disposable income. So
Okay.
a little bit lower than for most other types of debt.
Gotcha. And then what about unpaid taxes? Like how much can the IRS take?
Yeah, so for unpaid taxes, NerdWallet, Paychex, and Equifax all point out that the IRS doesn't actually have like a set percentage that they take. It's more determined on a case-by-case basis, and they look at things like your filing status. So, if you're single or married or head of household, how many dependents you have, all of those things factor in.
Right.
Paychex does mention that it can go up to 50% in some cases, though.
Wow. Okay. So it really depends on your individual situation with the IRS.
Exactly, yeah. It really depends on all of those individual factors.
Okay. So I noticed that Paychex and Equifax both mentioned that state laws can also play a role in setting these garnishment limits. So, like, how does that work? Like the interplay between federal and state law?
Yeah, so state laws can set different limits. And what Paychex and Equifax say is that the employer has to follow the law that results in the lesser garnishment. So if the state law says, only 10% can be garnished, but federal law says 25%, then they have to go with the 10%. They have to go with the lower amount.
Okay, so it's always the one that's more beneficial to the employee.
Right, exactly. The one that protects the employee more.
Okay.
And Paychex also points out that some states like North Carolina, South Carolina, Pennsylvania, and Texas, they actually have laws that generally prohibit wage garnishment for consumer debts.
Oh, wow. Okay.
So it really does depend on where you live. The laws can be very different from state to state.
Right. It's almost like a whole different world. Depending on where you are. So, okay, so we talked about wage garnishment. Let's talk about garnishment of benefits. So, like, what are the rules around that?
Yeah, so the CFPB says that generally garnishment of benefits also requires a court judgment, just like wage garnishment usually does. But there are some protections, especially for federal benefits, that are directly deposited into your bank account.
Okay.
The CFPB says that banks have to protect 2 months' worth of those benefits from being frozen or garnished.
Oh, okay. So there's like an automatic 2-month buffer there.
Exactly. Yeah. And what's interesting is that protection also applies if you get your benefits by check.
Okay.
So you can still claim that exemption, but you have to go through a different process to do it.
Gotcha. So for anyone who's getting those benefits by check, make sure that you know what to do and you get that exemption if you need to.
Exactly right.
Oh.
Yeah. You want to be prepared.
So what specific benefits are we talking about here?
Yeah, so the CFPB has a whole list of benefits that are covered. So Social Security, Supplemental Security Income, so SSI, veterans benefits, federal railroad payments. So that includes, retirement, unemployment, sickness, civil service retirement payments, so CSR, and federal employee retirement system payments. So FERS.
Okay, so it's a pretty broad range of programs there.
Yeah, I mean, it's a lot of the major federal benefits programs.
Right. Now, I think I remember seeing something from the CFPB where there might be some exceptions to this, even for those benefits.
Right, you are correct. There are some exceptions. So even with those protections, federal agencies like the IRS, the Department of Education, they can still take up to 15% of your Social Security or SSDI benefits without a court order.
Okay.
And then states can also garnish waging or RIC accounts for child support, sometimes without a court order as well.
Right. So it's not a foolproof, protection, but it's definitely a good start, and it's good to know that protection exists.
Yeah, it's a really important protection to have.
Okay, so let's talk about employee rights in general. So if someone's wages are being garnished, what rights do they actually have?
Yeah. So our sources point out several important rights. So NerdWallet says that you have the right to be legally notified of the garnishment.
Okay.
So, they can't just start taking your wages without telling you.
Right.
You also have the right to dispute the garnishment if you think the notice is wrong, if you think you don't actually owe the debt, or if the amount is wrong, or anything like that. And then NerdWallet, Paychex, and Equifax, they all agree that you can't be fired just because of a single wage garnishment.
Okay, that's good to know.
Yeah, that's really important for job security.
Yeah, that's huge. So it's good. So you're not going to lose your job if you're hit with one of these, unless it's like a really egregious case.
Right, exactly. I mean, there are some limited exceptions, but generally speaking, one garnishment is not going to get you fired.
Whoa. Right. Okay, that's good to know. And then what about specific income sources like Social Security and VA benefits? Are those generally protected from garnishment?
Yeah. So NerdWallet and Equifax, they both say that those kinds of benefits, Social Security, SSI, VA benefits, those are generally exempt from being garnished as income.
Okay.
But, and this is important, once those funds are deposited into your bank account, they can be subject to seizure unless they're directly deposited and covered by that federal protection that we talked about earlier.
Right.
So direct deposit is really important in those cases.
Gotcha. Okay. So it's kind of a two-pronged thing there. You have the protection for the income itself, but then once it hits your bank account, that's where it can get a little dicey.
Exactly.
Okay. So let's say that, someone does find themselves in a situation where their wages or benefits are being garnished. What are the first things they should do?
Yeah. So NerdWallet says that the first thing you should do is really carefully review that garnishment notice or the court judgment that you received. Just make sure that everything is accurate. Make sure the name is right. Make sure the debt is actually yours. The amount is correct.
Right.
All of that stuff. The CFPB, NerdWallet, and Equifax, they all recommend getting legal advice. So talk to a consumer law attorney or a legal aid organization.
Right.
They can help you understand your rights and see if there are any exemptions that you might be eligible for.
Okay.
The CFPB mentions some good resources too. Like you can contact your state bar association, the American Bar Association, and if you're in the military, you can contact a JEG office.
Right.
So there are a lot of places where you can get that help.
Okay. That's good advice.
Okay.
So what are some of the options that might be available for someone who's facing a wage garnishment?
Yeah, so NerdWallet and Equifax, they talk about a few different options. So one option is to try to negotiate a payment plan with the creditor.
Yep.
See if you can work something out with them directly, maybe avoid the garnishment altogether. Another option is to challenge a judgment in court if you think there was a mistake, or if, the garnishment is really causing you a lot of financial hardship, or if the garnishment itself wasn't done properly.
Okay.
NerdWallet says you have to act quickly in those cases. There's often a very short time frame, sometimes only like 5 business days to file something with the court. You might have to file what's called an exemption claim.
Okay.
And Equifax talks about that. And then, of course, the other option is just to accept the garnishment and pay off the debt.
Right.
Either through those automatic deductions or see if you can make a lump sum payment if you can afford it.
Right. Okay, so those are all good things to think about and discuss with your attorney if you end up in that situation. What about what if someone's benefits are being garnished and they think it's being done improperly, like it's violating those federal protections that we talked about earlier?
Yeah, so the CFPB says that in that case, you should file a complaint with them directly.
Okay.
They have the authority to investigate those claims and make sure that those protections are being followed.
Okay, so they're kind of the watchdog in that case.
Exactly.
Okay, good to know. Okay, so we talked about the employee's perspective. What about the employer? Like, what are their responsibilities if they get one of these garnishment orders?
Yeah, so Paychex is very clear about this. Employers are legally required to comply with garnishment orders.
Okay.
They have to do it. If they don't, they can face fines and penalties. They also have to notify the employee in writing when they get the order.
Okay.
So the employee knows what's going on.
Right. So it's not like the employer can just ignore it and say, oh, well, this is between you and them.
Right, exactly. They're part of this process, whether they like it or not.
Right. Okay. And how long does a garnishment usually last?
So NerdWallet and Paychex say that it'll stay in effect until the debt's paid off or the garnishment order is terminated.
Okay.
And Paychex says that employers get a notice when the garnishment is ending. That could be an IRS form for tax levies, or a notice from the state for child support, or a notice from the creditor for consumer debt.
Right.
So they'll know when it's over.
Okay. And then what about what if an employer gets multiple garnishment orders for the same employee? Like, how do they figure out, which one to pay first?
Yeah, so Paychex says that usually it's first come, first served.
Okay.
So whichever order they get first is the one they act on first. But there are exceptions, like child support and tax garnishments. Those get priority over other debts.
Okay, so those are the top priority ones.
Yeah, exactly. Okay, that makes sense. And then Paychex also mentions that employers can't refuse to garnish wages if they have a valid order, and that the IRS will always send a notice for tax garnishments, even if there's no court order. So, again, that kind of reinforces what we talked about earlier.
Right.
About the government's power in these situations.
Yeah, I mean, the government definitely has a lot of authority when it comes to collecting debts.
Right. And how does this show up on the employee's pay stub? Like, do they see it on there?
Yeah, so according to Paychex, you'll see a line item on your pay stub that says garnishment.
Okay.
And sometimes it might even say, like garnishment child support or something like that.
Yeah.
And the amount that was deducted should be clear too.
Right. So there's transparency there.
Okay, so finally, let's talk about the long-term impact of wage garnishment. So like beyond the immediate, reduction in your take-home pay, what are some of the long-term consequences?
Yeah, so Equifax points out that, obviously there's the reduced income, which can make it hard to pay your bills and, just manage your finances in general.
Right.
But it can also hurt your credit score. So the garnishment itself doesn't show up on your credit report, but the underlying debt that led to the garnishment does.
Right.
So those missed payments, they can stay on your report for up to 7 years. And that can make it really hard to get credit in the future.
Right. So it's kind of like a double whammy. You're getting hit with the reduced income, and then you're also getting hit with a potential credit score drop.
Exactly. Yeah. It's a really tough situation to be in.
Right. Okay. Well, this has been a really thorough and informative deep dive into this topic. So I think the key takeaways here are that wage garnishment is a serious thing. It's a legal process.
Mm-hmm.
But there are laws in place, both federal and state laws, to protect you, to protect a portion of your income and to protect certain benefits. So knowing your rights and understanding the laws in your state and knowing what options are available to you, all that's really important.
Yeah. I mean, knowledge is power in these situations. The more you know, the better equipped you are to handle it.
Exactly. And as we've discussed, like if you think a garnishment is wrong or if it's causing you a lot of hardship, you should definitely talk to a lawyer.
Yeah, absolutely. I mean, that's really important. Don't just try to handle this on your own. Get some professional advice.
Right. Exactly. So we've talked about a lot of resources throughout the show, but I think it's worth mentioning again, the Consumer Financial Protection Bureau. They're a great resource. Lawhelp.org. They have a lot of good information, and your state bar association. They can all of those resources can help you find more detailed information and find out about specific regulations in your state.
Yeah, those are definitely good places to start.
So I guess just a final thought to leave everyone with, given how complicated all this is and how much it can vary from state to state and how big of an impact it can have on your finances and really just on your life in general, what can people do to prepare themselves for this possibility? Like not just, financially, but also like just in terms of knowing what their rights are and knowing where to go for help and all of that.
Yeah, I mean, that's a really great question. And I think it's one that everyone should be thinking about. It's not something that we like to think about, but it's a reality for a lot of people.
Right.
So I think, being proactive, being informed, knowing your rights, those are all really important steps that you can take.
Right. Okay. Well, that's all the time we have for today. Thanks for listening to The Deep Dive.
Thanks for having me.
Up another insightful episode of the Deep Dive Credit Podcast, brought to you by Elite Credit Solutions. your go-to resource for affordable credit repair across the United States. We appreciate you joining us today, and we hope you found the information valuable and empowering. If you're ready to take control of your financial future, don't hesitate to reach out to us at 813-317-6776. Additionally, don't forget to like today's podcast, share with your friends on social media, follow us, and subscribe to our YouTube channel to stay in tune with future updates. Thank you for listening, and until next time, keep striving for excellence in your credit journey.